Picture a fleet owner I worked with last season. Big bid, closed in March. Then 2 key customers pushed payment out 60 days. They had a pressure washer pump fail the week before the work started and needed a same-day fix to keep the crews rolling. Short on cash, they took the first fast offer, a merchant cash advance. It solved the problem today, but within months, that $45,000 job looked very different. They paid an extra $6,500 in financing costs and lost pricing flexibility on future bids. It cost them more than cash. It cost them control.
Welcome to the Veteran Entrepreneur Network. I'm Cameron Burrell, Army engineer veteran, entrepreneur, and fleet services operator. Today, I want to give you a 2-minute framework you can use on the phone when cash gets tight, plus scripts, a 1-page approval packet, and negotiation lines so financing helps growth instead of eating it.
Quick primer on what you'll actually see in the field. Line of credit. Think of it as a safety net. Fast, usually days to a week. Paperwork, bank statements, and a short history. Cost, reasonable if you pay it down. Invoice factoring. Cash in 24 to 72 hours, if the customer is solid. The catch, fees and holdbacks that can shave job margins and sometimes complicate customer relationships. Equipment loans or leases. Slower to set up, but cheaper over time when you're buying an asset. Good for planned purchases, less so for panic replacements. Merchant cash advances and super short options. Same-day money, but repayments tied to card volume and effective APRs that can be brutal. Credit cards are flexible, but interest compounds fast if balances grow. Short-term SBA or community lender products exist, but they tend to be slower and paperwork-heavy, best for larger, planned projects, not emergency replacements. All right, how do you pick? Use this 5-question field checklist and answer out loud on the call. 1. How fast do I need it? 2. How long until I can repay it? 3. What collateral am I willing to encumber? 4. How visible and reliable is the revenue that will repay this? 5. What's the maximum total cost I'll tolerate for this money? Map those answers to products. Need cash in 24 to 72 hours with a known invoice? Factor it. Need a short bridge for 30 days and you have bank history? A small LOC works. Need equipment now and you can stretch payments over years? Look to an equipment loan or lease. If you're stuck on daily card receipts and have no other options, a merchant advance becomes a last resort tool, not a first call. What if that invoice never clears on time? That's the tension. You need a backup plan, either a small reserve LOC to carry the gap or negotiated contract terms that push milestone payments earlier. Don't build your plan on hope. Build it on the most likely cash source. Rules of thumb on cost. Convert one-time fees and factor rates into an effective APR so you compare apples to apples. Merchant advances can behave like 3 to 4-digit APRs. Factoring for strong customers might sit in the high single digits to low triple digits, depending on holdbacks. A bank-backed LOC is typically much lower. Always compute what financing does to job margin before you sign. Negotiation levers that actually move numbers. Reduce holdbacks by providing customer confirmation. Offer to route payment through escrow. Trade a slightly higher weight for waived origination fees. Lenders want predictable cash flow, clean receivables, bank statements, and a clear repayment source. Give them certainty, and they'll give you flexibility. A quick compliance warning. Watch clauses that require you to assign customer contracts without consent, or take broad indemnities that conflict with prime contractor terms. Also, watch for liens on vehicles or required DOT equipment. Small legal missteps can create big operational headaches. Execution playbook. What to have ready so approvals happen fast. 1-page packet. 90 days of business bank statements. 2 most relevant invoices. Customer confirmation or PO. Equipment quotes if replacing gear. And a short cover note that states exactly how much you need, how you'll use it, and how you'll repay it. Deliver that, and you move from maybe to how soon. Use this script when you call a lender.
I need a $XXX$X$X$X$ bridge to cover a specific job payment. I can repay from invoice number 12345 due in 30 days. I'll provide the invoice, customer confirmation, and 90 days of bank statements. What documentation do you need to approve this in 24 to 72 hours? That forces the conversation onto speed and repayment, not product push.
If you need a negotiating line, I'll accept a 0.5% higher rate if you remove the 10% holdback. Short, clear, and it creates a tangible trade-off.
Quick recap: know your timeline and repayment source. Convert fees to effective APR. Prefer secured loans or LOCs for planned needs. Use factoring or short bridges when invoices are the repayment. Treat merchant advances as last resort tools. Keep your one-page finance packet current and always check lender clauses against DOT or prime contract requirements.
Grab the 2-page financing checklist and the sample lender email templates at vetbizmedia.com/fleetwash so you can act fast the next time cash is tight. Those templates mirror the scripts I gave you, and the checklist has the 5-question decision flow.
Thanks for listening to the Veteran Entrepreneur Network. Subscribe, leave a review, and share this with another entrepreneur or owner-operator. Keep building, keep learning, keep moving forward.